Thank you to all who are just joining. As you're entering, if you want to just drop your name in the chat and where you're located, if you feel comfortable, please feel free to do so. We're going to get started in the next 2 minutes. Avery, I saw your question on if this will be recorded. Yes, this session is being recorded and it will be shared out with everyone post the webinar. So you will get an email follow-up of this recording. Okay, we can go ahead and get started. So again, thank you all for joining us this afternoon for the Funding the Farm, your FSA Starting Point webinar. Before we get started, I do just want to let everyone know that this webinar is being recorded and go over a few housekeeping rules. So if you could stay muted during the whole webinar, that would be great. If you have questions, please feel free to drop those in the chat, or you can save them for the end where we have a Q&A session. This webinar, again, is being recorded and will be shared with all attendees afterwards. And if you haven't already, go ahead and introduce yourself in the chat, where you're calling from, and what you produce. So today, this is going to be our agenda. We are going to cover FSA loan programs, eligibility requirements, farm loan options, farm loan documentation, and the farm loan process. Today, you will be hearing from three of my colleagues from National Young Farmers Coalition, Shakira Regoza, Ebonee Stevenson, and Rachel Stewart. And I am T. Turner. I am with RAFI, and my other colleague that usually joins us is Melissa Polanco. She's a technical assistance provider. She's not on the call, but is someone that you can reach out to if you need assistance. So without further ado, I'm going to pass it over to Shakira to get us started.
Hello, everyone. Thank you for joining us today. So all of you here are interested in learning about FSA programs for funding your farm. And just a brief overview, if you're not familiar with who the FSA is, the FSA is a branch of the USDA, and it offers a variety of programs, not just loans, but they also help farmers under disaster relief, conservation efforts, commodity price guarantees, and the loan programs. Next slide, please. So they have a different program for your needs. So there's farm ownership loans, operating loans, emergency loans, and help for farmers and ranchers to manage their businesses. These are a list of the options for FSA loans. You can borrow money directly from FSA. They also have microloans for smaller amounts that are easier to apply for. And they also provide guarantee loans, which we'll get into a little bit later, emergency loans, and youth loan. So what are the benefits of receiving a loan through the FSA? These loans are meant for farmers or those who can't access credit elsewhere. So the loan is not based just on your credit score. So if you have limited or some questionable credit, then FSA can still lend to you. Also, their interest rates are usually lower than your traditional banks. And one of the advantages of applying to FSA is that you can have annual payments. So you're not looking at a monthly payment that allows you to get through your growing season of your operation to have the funding to pay back the loan. They do have several 0% down payment options for the operating loans and also for ownership loans. And they do provide financing for land that's not developed. And the loan terms can extend to as long as 40 years. So there are some eligibility requirements. You do need to be operating a family farm. Their definition of a family farm, it doesn't mean that everyone in the operation needs to be related, but it means that you need to be actively involved in the growing process and that you are doing this for profit, not a nonprofit farm. You need to be of age to sign a contract, so at least 18 years of older, and not be able to get credit from another lender. Have an acceptable credit history, sufficient managerial ability. So if you have any type of experience managing a business or in another operating a business for someone else. Also, you need to be a U.S. citizen or non-citizen national or a legal resident alien. No previous debt forgiveness by the FSA and no delinquency on federal debt, although you can have IRS tax debt. No federal crop violations and no federal or state convictions for controlled substances. So the first set of loans that FSA offers are direct farm loans. They're designed to help farmers start, purchase, or expand their farming operation. From beginning farmers who have limited financial history to qualifying for commercial credit, to farmers who have suffered financial setbacks from natural disasters. FSA offers a variety of loans to provide additional resources to farmers needed to establish and maintain profitable farming businesses. So with a direct loan, it's exactly what it says. You're applying directly with the Farm Service Agency. So there are two main types of direct loans. They divide them up into ownership loans and operating loans. Ownership loans are used to purchase a farm, or you can enlarge an existing farm, make improvements like construct new buildings or improve structures, such as like fencing or wells. And these loans can also be used to pay closing costs. So that would be like your 0% down options. They also can be used to promote soil and water conservation and protection. Direct loans are available up to a maximum of $600,000. Now, there are loans that are microloans that you can apply for, and those are up to $50,000. And the maximum repayment term is 40 years, although it can be as short as 20 years if you have a good business plan and show that you can pay it off earlier. The next set of direct farm loans are operating loans. These are used to purchase machinery or equipment, make minor real estate repairs or improvements, refinancing a debt, and the maximum loan amount is $400,000. And there is also a microloan option for this, which is also $50,000. And the other option that we have are the guaranteed farm loans. And you see here. So the guaranteed farm loans are through a financial institution other than the bank. So in case you are able to get credit elsewhere, there are benefits to going through the bank versus working with FSA. The financial institution, let's say it's Ag Credit or Credit Union, they are going to become FSA's customer. If you seem like a risky client, they'll approach FSA for a 95% guarantee. So if you default, FSA will pay up to 95% of the loan. As you can see, one of the advantages of getting a guaranteed loan is that you can borrow much more. For the direct loans, the maximum loan amount is 600,000 for a land loan or 400,000 for the operating loan. If you go with a traditional lender and get the guarantee, you can borrow up to, or they will finance up to, guarantee 2,343,000.
The lender and loan applicant complete the application for the guarantee and submit it to the FSA Service Center in their lending area. The Service Center works with the commercial lender to process the guarantee. So guaranteed farm loans, or guaranteed, they have ownership loans and operating loans. So for the ownership loan, the purchase is for farmland to construct or repair buildings and other fixtures, develop farmland to promote soil and water conservation, or to refinance debt. There's the operating loan, which can be used to purchase livestock, farm equipment, feed, seed, fuel, farm chemicals, insurance, and other operating expenses. Operating loans also may be used to pay for minor improvements to buildings, costs associated with land and water development, family living expenses, and to refinance a debt under certain conditions. These loans may be structured as term loans or lines of credit depending upon the purpose and intended term of the loan. So the guaranteed farm loan programs. To qualify for an FSA guarantee, a loan applicant must be a U.S. citizen, have an acceptable credit history as determined by the lender, have the legal capacity to incur responsibility for the loan obligation, be unable to obtain a loan without an FSA guarantee, not have caused FSA a financial loss by receiving debt forgiveness, and not be the owner operator or tenant operator of a family farm after the loan is closed, not be delinquent on any federal debt. So the Easy Guarantee program is available for smaller loans. This program provides a simplified guaranteed loan application process to help small, new, or underserved family farmers with early financial assistance. The Easy Guarantee is available for farm loan applications up to $100,000 for farms operating or farm ownership purposes. Streamlined financial underwriting is available for these loans, allowing all approved lenders to analyze the request in the same manner in which they would analyze a non-guaranteed loan at the same size and type. All existing eligibility, loan purpose security, and other requirements remain the same. FSA also guaranteed conservation loans and land contract guarantees. The maximum loan limit for land contract guarantees are $500,000. Guarantees will be offered to the owner of the farm who wishes to sell real estate. Before we go on to the land contract, also when you're dealing with a guaranteed loan through a commercial lender, you have to put 30% down. So it's very different than a direct loan directly through the Farm Service Agency, which could have 0 down. So with the land contract, the guarantee is $500,000, and guarantee means that if you default on it, that the federal government is going to pay that lender no matter what. So they have a lot less risk involved, and it's more of an incentive for them to do the loan with you. So the guarantee will be offered to the owner of the farm who wishes to sell real estate through a land contract to a beginning farmer or a farmer who's a member of a socially disadvantaged group. The guarantee provides an incentive to sell to individuals in these groups as it reduces the financial risk to the seller due to the buyer default on the contract payments. A land contract is an installment contract between the buyer and a seller for the sale of real property in which the complete ownership of the property is not transferred until all the payments under the contract have been made. Now, also, real quick, well, as we talk about the land contracts are fully negotiable. So the seller may have certain things that they're looking for, but because if they are willing to take the USDA guaranteed loan for the land contract, sometimes you can negotiate to match interest rates or do things that are better, because if you default for 1 year's payment, or maybe they want you to make monthly payments and you can negotiate to do one annual payment. There's a lot of different things that you can play with because it's not a bank, it's a person. So you have to really set the terms that are going to be successful for you. Because if you miss the one payment a year, or you default on it, it's going to be specified in your land contract when and how long after that default will they get paid out by the USDA. So the land will get paid out by the USDA and then forfeited over to the USDA as well. And then next is microloans. These loans are better to serve the unique financial operating needs of new, niche, and small to mid-sized family farm operations. Microloans are more flexible, access to credit, and serve as an attractive loan alternative for smaller farming operations like specialty crop producers and operators of community-supported agriculture. So microloans, operating microloans can be used for all approved operating expenses authorized by the FSA operating loan program, including but not limited to initial startup expenses, annual expenses such as seed, fertilizer, utilities, land rents, marketing and distribution expenses, family living expenses, purchase of livestock, equipment, and other materials essential to farm operations, minor farm improvements such as wells, coolers, hoop houses to extend the growing season, essential tools, irrigation, and delivery vehicles. And micro ownership loans. Micro ownership loans can be used for all approved expenses authorized by the FSA Farm Ownership Loan Program. So to purchase a farm or farmland, enlarge an existing farm, construct new farm buildings, improve existing farm buildings, and pay closing costs, implementing soil and water conservation and protection practices. So the microloans are also able to be used for any of the same things that we discussed, whether it's a land contract to buy the property and negotiate that. But these are also directly through the USDA Farm Service Agency. And the same with the operating loan. Those can be used for the same purposes to operate your farm. And they do take your family cost of living into account on all of your applications as well. So I like that in there, and I wanted to mention that. So emergency loans are loans to help producers recover from production and physical losses due to drought, flooding, and other natural disasters or quarantine. So they may be used for, and this means that an emergency was declared in where that farm was. So it's used to restore or replace essential property, pay all or part of production costs, pay essential family living expenses, reorganize the farming operation, or refinance certain debts. So emergency loans may be made to farmers and ranchers who own and operate land in a county declared by the president or designated by the Secretary of Agriculture as a primary disaster area or quarantine area. All counties contiguous to the declared, designated, or quarantined primary counties also are eligible for emergency loans. A disaster designation by the FSA administrator authorizes emergency loan assistance for physical losses only in the designated and contiguous counties. Established family farm operators have sufficient farming or ranching experience. Citizens or permanent residents of the United States have suffered a loss of production below the normal production yield of the crop and realized physical loss to livestock, livestock products, real estate, or personal property, have an acceptable credit history, are unable to receive credit from commercial sources, and can provide collateral to secure the loan, and have repayment ability. So it's like applying for a loan all over again, but it's due to a disaster. And then we have youth loans. So.
All right. I'm gonna take it away. All right. So youth loans are a really great product that the FSA offers that not enough families know about. Not a lot of farm operators know about. And so basically, youth loans are something that so let's say you have children in your household who are a part of your family farming operation. or you have children in your family who want to get started in farming. And as long as they're between the ages of 10 to 20, they can apply for up to $10,000 to fund their own agricultural project. But the key thing is, because we're looking at farm businesses, that it has to be an income generating project. So let's say you have one child and they want to get started selling eggs, and so they create a plan where they buy chicks, and they buy feed and all these other things, and then they raise those chicks, and then they start selling eggs, let's say to family or their local community, and it's generating income. Let's say you have a child who wants to start a small beekeeping operation, and they can use those funds to as startup capital to help get the business started. We've seen youth want to do microgreens, to start learning how to grow microgreens or mushrooms or any of those things, as long as it is generated an income. Next slide. And so, like I said, the project must be related to farming, raising livestock, or growing crops. It must be initiated, planned, and managed by the youth. And so it is an undertaking. The youth must be a member of a group like a 4-H club, the FFA, a tribal youth org, or another agricultural club. And for some people, these entities might not be in the area where you live, but you can always reach out to your local FSA office. I've even seen it in more urban areas where there wasn't access to a 4-H club, an FFA, or a tribal youth organization, where they allowed an agricultural teacher to be the advisor for the youth project. Because it's just like when you, as a farmer, are you have to make your farm plan to submit to the FSA. The youth also has to make a farm plan that goes over, what are they, what is the project, what the expenses are, all of these things, and how what the projected profit is. Next slide. Yes, and so, for example, you can use it to buy livestock, seeds, equipment, and supplies. Also, and this is something that people don't know about, you can use it to buy, rent, or repair tools and equipment, and then also pay for the operating expenses of the project. You just have to comply with the FSA's general eligibility requirements, and then once again, that we have to be between the ages of 10 to 20, and then conduct a modest income producing project in a supervised program of work. And I told you, if you don't have an FFA, 4-H club, or tribal youth organization, then you can get, like, let's say, if you have an agriculture teacher or a horticulture teacher who can serve as a supervisor on your project. Next slide. What type of paperwork will I have to complete? So all applicants are going to need to make sure that you have all your paperwork together. You're going to need to make sure you have your tax ID numbers. If you are applying as like a corporation or an LLC, make sure that your business structure is together. And you also can use your social security number if you're applying as a sole proprietor. 3 years of financial history, tax returns, 3 years of production history, 3 years of management experience, a business plan. Like, you're gonna have to let them know, like, what are your major debts, creditors, and things like that. If you have any additional off-farm income, and then a purchase it. So this is for if you are applying for an ownership loan, a purchase agreement, or a lease agreement for the property that you are looking to get. So, like, if you're leasing a property and this is what you are doing a loan for, then you're going to need that lease agreement from the owner. If you are purchasing a property, then you're going to need a sales contract in order to make your application complete. Next slide. Are beginning farmers eligible for direct ownership loans? Beginning farmers can meet farm management eligibility requirements through, you can substitute 2 years of post-secondary education, leadership experience in the military, significant business management experience. So let's say you've had another, and we encounter a lot of farmers like this. Let's say you managed a different kind of business that was completely unrelated to farming, but as long as you were in a management role, then that will qualify for that 2 years. At least 1 year experience as hired farm labor, with management responsibilities. If you completed a farm mentorship, an apprenticeship, or an internship program, and if you have an established relationship with an individual who already has the experience in farming, who can come in on that application with you. Next slide. And this is interest rates. So the interest rates change monthly. And while you're in your farm loan process, you just have to like monitor these for when you do submit your loan application. And so currently, operating loans 4.75%, all the way down. Ownership loans 5.75%. The joint financing loan is 3.75%. And the down payment loan is 1.75%. And then the emergency loan is 3.75%. And these interest rates are as of May 1st, and they will change again next month. Next slide. So the thing that I would say is that this process, this workflow, is very important so that you can understand like how these things work. And so in order to make your application process as smooth as possible, you want to make sure that all of your documents are together, because if they are not, can delay your application. You want to make sure that when you do your farm plan, that all your math is correct. We've seen this so many times. Like, you have to show that whatever farming operation that you are submitting to the FSA, that there is going to be enough money. There's got to be a profit. You can't submit an application that shows already out the back that you're going to have a loss, because the FSA wants to know that you're going to have enough money in this farm plan to be able to cover the cost of your payments. And so, it was mentioned before, the thing that's unique when you're doing like a ownership loan or a micro loan, or an operating loan with a FSA, is that you don't have to worry about those monthly payments like you would with a regular credit provider. You get annual payments, and that is very helpful, for farmers to be able to just worry about one payment a year. And so this is the list of documentations that you should have. Make sure, like, if you're going to lease, you got the lease agreement. If you're going to purchase a property, make sure you have a sales contract. If you're getting an operating loan, maybe you already have a property, deed of trust. You want to make sure you have your business plan, your farm balance sheet, and all of these things can kind of be combined into one. Because here at Young Farmers and at Rafi, we provide technical assistance to make sure that these documents that you have, one, are together, and to make sure that your farm plan is correct and that the numbers match and that it makes sense. Because it doesn't make sense. Let's say you've had a dream, and you always wanted to raise bees, and you come up with a farm plan, and we run the numbers, and you've priced your honey, you've priced your supplies, you've priced your startup costs. It doesn't make sense as a business if already out of the door you're going to be running at a negative. And so you want to make sure that you're pricing your products correctly, that there's going to be a profit, because like I said, the FSA, they want to see that you can pay this loan off. They're not going to give you a loan if your books are already in a negative. And so you just want to make sure that that's together. We help you with those resources. You submit your application and all your documentation to the FSA. You should get a confirmation that they have received your information. And then they should send you a letter, letting you know if they need further documentation. But we want to make sure that we always submit everything that's required so that you don't have that issue, because it can delay your application. And while you're doing this process and you submit it, when you have a complete application, and a complete application means everything is together, they'll send you a letter confirming that that is complete. And during this process, you might get a phone calls, or your local office will follow up with you in case they have any questions. And then you should receive a determination letter within 60 days letting you know if your loan has been approved or not. Once your loan is approved, you'll get a letter saying it has been approved. And then you'll go, let's say if you're doing an ownership loan, like you'll go through appraisals and all of these things. And then on the flip side, if your loan is denied, then you'll get a denial letter with an explanation about why it was denied, and then the option for appeals. And if that does happen, then you reach out to us, because we have gotten people who have gotten denial letters, and we've been successful in helping them to reapply and get approved. And then if you get approved, and then your loan closing, once you get all your documents together, and then they will schedule the time and the day for you to close your loan. And then after that happens, the funds should be available within 15 days. So what do we do? So here at Young Farmers and at Rafi, we provide technical assistance to farmers. Consider us as your farm loan besties, okay? So we do webinars like this one, letting people know about the different FSA loan resources. We also do tailored webinars. So like if you have a farm group that you are a part of, and you want to get together, and you let's say you have other members in your family who are also farmers, who are thinking about applying for an FSA loan or need some help, and you guys want to get together and hop on a webinar and receive some TA, that's what we do. We also provide one-on-one technical assistance throughout the application process, from the beginning all the way up until after the closing, because we want to make sure that you are successful in this farming journey, and to make sure that everything that is in order, so when you submit your application to the FSA, that it's a smooth process as possible. If you are thinking about, well, hey, do I qualify for this loan? Eligibility, you can reach out to us and we'll walk you through that process. And then also, we've been successful in connecting farmers to their local offices, because we know that for some of us, there might not be a local office that's close to you, right? And so we work with farmers who their local offices is 2 hours away. So we try to streamline the process so that you can do the majority of the things that you need to do virtually, like emailing the local office, calling the local office, submitting your paperwork online or via email, so that that process can be as smooth as possible, because we would hate for you to have to drive multiple times 2 hours away from your house, when we can do the process virtually. And then, like, if there's any issues with discrimination, like if you feel like there was some discrimination dealing with your local office, we can also address that as well. Next slide. Okay, so these are a couple of our success stories. We have, can you scroll up a little bit? I'm sorry, I can't see the bottom of the slide. Or is that just me? So this is Sunshine's Bounty. They did a farm ownership loan that included home construction. Yes, this is something that you can do with an FSA ownership loan. And so they were able to get on their farm, and they were so happy. This is their family. Like I said, we love helping family farmers. We love making sure that people can go through this process as smooth as possible, so that they can work on those farm dreams. Next slide. And then this is Arnold. His process went very quickly. He did a microloan, and the microloan process is the most smoothest process. So that's the one where we discussed, where you can get an ownership microloan for up to $50,000, and you can get an operating microloan for up to $50,000. And so Arnold, he used his microloan to get a tractor and some other equipment, because he's working on 20 to 40 acres in hay production. And so I believe, Shakira, his process was less than a month, correct? That it
Yes.
took him to get approved?
Yes.
Awesome. And so, see, it really depends. And this is why you want to make sure that you're working with the technical assistance provider like Young Farmers or Rafi, to make sure that you have everything together so that you can get these resources, this capital, as soon as possible. Next slide. And so we know that this was a lot of information. And like it was said earlier, this webinar will be shared with everyone virtually. But if you've looked at this webinar and you're like, hey, this is for me. I need some technical assistance. I want to explore getting an operating loan or an ownership loan, or you're like, hey, I'm working on my application and I want to make sure that everything is together. And so these are the resources that we offer. So it's no shame, right? Well, like I said, we're your farm besties. Like if you want to know about FSA loans, reach out to us. And so I'm Ebonee. You can reach out to me at ebonee@youngfarmers.org. You heard from Shakira. You can reach out to her at shakira@youngfarmers.org. You heard from Rachel. You can reach out to her at rachel@youngfarmers.org. And you heard from T. You can reach out to her at tiara@rafausa.org. And so I guess now we will go into the Q&A. I hope that this information was helpful to you guys. And like I said, if you have any questions, even about the youth loans, right? Because raise your hand. How many of you knew that youth loans was an actual thing within the FSA? And I'm going to answer a question with some of you it might be floating around in your head, which we always get asked. So like, let's say if you have 4 children in your household and they fall between the ages of 10 to 20, and you're like, can only one child get the youth loan, or can multiple children get the youth loan? And the answer is each child can apply for the youth loan. So if it's up to $10,000, that doesn't mean you have to take out $10,000, but that means that each child can apply for the youth loan. So let's say you got 4 children. Each child wanted to do a different kind of farming operation, a different kind of farming business. That's $40,000 right there. And then when they pay that off, then that also lets them get into that pot that was mentioned earlier, where you can apply, like when you're 18, and you can apply up to, as long as you meet the requirements, up to $600,000 for ownership loans, and up to $400,000 for operating loans. They'll already meet the requirements to get the big money when they turn 18 if they pay off the money that they borrowed when they were a youth. And so these are some of the advantages of the FSA loans. And so now I'm gonna turn it back over to Shakira for Q&A.
Shakira, before you go, I already had a few questions come in through the chat. The first question was from Joy, and her question was, any suggestions for business plans to take to the lenders and FSA for better chances of success?
I'll just repeat what Ebony said. You definitely have to go over your crop planning and make sure that your volumes and your pricing show a profitable business. So they look at the details, so it's better you go upfront, very prepared. So they use their own pricing, and many times, if we're small, diversified farmers, we're getting a higher price for a high quality item, and they need proof of that. So make sure you have some commitment letters or any proof of the premium prices that you're getting for your products. That's one suggestion that I have.
Thank you, Shakira. Anything from you, Rachel or Ebony?
I would also say, I wouldn't, so like when you do your farm plan, right? Sometimes if you just Google like business plan, um, a lot of these business plans have so much information that the FSA is not looking for. Like you want to make sure that you are tailoring your business plan to your farming operation, because they're not going to look at 50 pages of a farm plan, right? You want to make sure that your numbers are together, that your actual plan is together. And so we do have some recommendations for some resources that we utilize. And then sometimes your farm plan could be just a couple pages, like what you're going to do, where you're going to do it, right? And then all the numbers. The numbers is the biggest part of your farm plan, because as the young people say, if the math ain't mathin', you will not get approved.
And I've seen people just use, like, if they had a farm stand, just their records. They'll, like, if you say, well, I've been running a business for this amount of years, then sometimes they want some type of evidence. So yeah, you want to have something to show that, or some type of records. Receipts count as well.
Thank you, ladies. The next question is, can microloans be used to bridge the gap to buy a farm property with a home on it? So, for example, suppose the farm costs 350K and they have 300K, but could they use a farm loan of 50K to help them bridge that gap?
Yes, exactly. That's what those are used for. The microloans can be used for paying your closing costs, but also the down payment portion of the loan. And Rachel, you're going to add some.
Oh, one thing to this is a little separate, but it's some information, is that the value, so this is different than a real estate loan. So the value of the land is what matters for your loan, because this is about farming. So it's the farmland that matters, and the appraisal will go for that, the value of the land. They actually like disregard the buildings unless it's like a processing facility or something that's going to be even like barns. They just kind of come with it. It's not necessarily, I could be wrong, but it's not necessarily used in the appraisal process. It's just the cost per acre and your purchase. Where the real estate, it's more about the house, and that's what your appraisal is going for. So a lot of times, like in a city or something, your appraisal is going to go really high, and it's on a really small acre of land. Where now, like it's about the price per acre that is the main issue. So you want to divide that, the total price by how many acres, and that's your price per acre.
Thank you, ladies. Waza had two questions, so I'm gonna just combine them and then I'll go to another question. So the first question they asked was, will my current home mortgage loan be an issue if I'm trying to get a second mortgage for a farm with a home? And then the second question they had was, will their U.S. Army veteran status help?
So I can answer the first question. The second, well, the home mortgage loan would impact your debt ratio. So they will take into account all of your debts. We mentioned briefly like a balance sheet. So they will ask for a list of all your creditors, your current balance, your interest rates, and your monthly or annual payment. So if you have off-farm income, or if you have a business plan that's going to project that you can pay that mortgage loan and the FSA loan, then it shouldn't be a problem.
And the next question is, are there standardized price lists that the FSA uses?
The prices they use, it varies by county. So it depends on the rates that your county sets with your county committee. And if you have other pricing available that you can share, you can also use other resources like from ag extensions and other resources. But generally, the FSA pricing is usually lower than the rate that some farmers can get for their product.
I
And
think,
then,
oh, go ahead.
oh, I was gonna say also, I think we missed the second part of that question, was
Yep.
about the military.
Mhm.
Yeah, I just wanted to highlight that before we got into the next question to bring them back up. I'm sorry, Rachel, what were you gonna say?
The market price, if we're talking about like crops or meat or things like that. So usually sometimes you can look it up by your state as well. Or if you any type of resource, like in Illinois, I was looking up what the schools paid for somebody, and that was like what we were counting as like market price, because they just want some type of resource for what the market price is for that specific crop, because they can't just make it up. They have to have some type of reference.
Ebony, did you want to take the question about the veteran status?
Yes. And so it can be advantageous when you are looking to get an FSA loan, because it can also, that experience can count as that, the management experience that we talked about earlier when we were going over the farm loan qualifications. There's also some benefits. So like to qualify as a veteran, you must have been released from service under conditions other than dishonorable. And then you must have started or are going to start farming within the last 10 years. So there are a couple of things that are advantageous for veterans. And then if you would like more information about that, you can definitely reach out to us. And there is actually a farm group that actually deals with a lot of veteran farmers, and like actually has a lot of resources. And that's the was it Farmer Veterans Coalition. They even have a label. I'm trying to remember, is it made by veterans or something like that? That you can use on your products that you produce. And so, like, they have a lot of resources from farmers, and I do believe they also have some specific veteran farmer grants or programs that they have. So I would definitely reach out to them as well.
Thank you, ma'am. The next question is, how many commercial banks have to turn down your farm loan application before you're eligible for FSA farm ownership loan? Are they, oh, sorry, are they fixed or adjustable rate?
So in the handbook, it says that you have to have at least two denial letters, but this always varies based on your loan officer and the office that you're working with. Some of them do not request it, so you can always reach out and go directly to FSA. And if they do require, then you should go see the commercial lenders. The rate. Oh, go ahead, Rachel.
Oh, no. Well, sometimes the denial amounts also, or the amount of denials matters based on the amount you're applying for. So like if your emergency loan is under a certain amount, you just need one denial. If it's over, I think 300,000, then you need like 3 denials. So it also just depends on if they're going to be sticklers about it or certain things like that. And it could be like from Wells Fargo. It doesn't have to be from like it's any lender. But yeah, go ahead, Shakira.
Oh, you're good. Yeah, that's very true. Um, so for the rates, the FSA rates are fixed rates. So once you close on your loan or sign the paperwork, then that's your rate for the rest of the term.
And one thing, I think it might have been mentioned earlier, but I just wanted to emphasize it. It's best to kind of come to us first because the person you're dealing with, you don't know if they are the underwriter. So like they're not there to help you with your loan application. They're there to process your loan application, tell you if it's incomplete. But if you're like, well, what do I want to put on my farm loan application? They don't know. They don't know what your plan is going to be, So if you're like still processing it or thinking about it or wondering what you should do. Like you really have to have it set in your mind that you are the farm owner, ranch owner, this is what you need. And then you have to have this to go ahead and proceed. And then you want to know your farm plan like front and back, and we'll help you with that as well. Like get you through it. And then like the more you work with it, the more you learn it, and you're set to kind of go in. No matter what they say, we could always kind of work with you to figure it out for how to proceed.
Thank you, ladies. Next question is asking, are there any resources for heirs property? When I tried to use it last time, the runaround was I had to be living in the heirs property. How will FSA help with heirs property?
I don't have as much experience with the heirs property and FSA, but there are organizations that are specifically working in that area, and I can share some resources to reach out to them. I think it's like the Southern Cooperative Corporation. I'm probably totally messing up the name, but I'll put some resources in the chat.
Okay. And next question is asking for operating loans. Can multiple loans be applied for and held at one time? For instance, can I apply for a microloan multiple years in a row, almost as a line of credit? Are there any limitations to this?
So it's kind of the microloan is kind of a revolving credit line, but from what I understand, anytime you so like if you're approved for 50,000 and you are using just like a little bit to put in the fence, and then you use a little bit more to put in the septic tank or something like that. They don't really like you to keep making withdrawals over a longer time, because it messes with their system. Because if you're approved for 50,000 on one date, then your due date is set for a year from then. But they also have to recalculate the interest every time that you're making withdrawals. So they recommend, like, if you're not going to use it at once, then don't, apply for it when you're going to use it. And they've been reluctant, I've seen in the past, to approve farmers for building loans. This is not even just micro, for like for the home building loan, and they recommend getting like a mobile home instead, because then it's just like less expenses going out at different times. But you should be like, if you got a $50,000 micro loan and then you paid $25,000 back, if you're in good standing, then you should be eligible to reborrow that 25,000 again. But I really caution against like borrowing all the time, unless you're just like a pro at this. And I have had farmers who are this, they are pros at this, and they know how to just fill out all these forms and do all their balance sheets, and they like that. But for me, it's like getting through this is really, I don't like to do it. I mean, I like helping people, but for my personal farm, I don't like to go through this again. And every time you go through and borrow again, they're going to recollateralize your farm, they're going to reevaluate your operation. And so it's kind of like better to go in, and I don't want to say get everything that you need, like get the maximum. I really also encourage getting the minimum of what you need, because you have to pay it back, and we want you to be successful. So sometimes people are like, I want $1 million, but then that payment for your ownership and your operating is like, I don't know, maybe $70,000 plus a year. So and then also when you borrow the maximum, that you don't have that cushion at the end, where if you do have an issue and you can't pay back your loan that year, they can't add a payment onto the end, because you've already taken out your maximum, or you've done the maximum amount of years and things like that as well. And then once again, you have to refill out all the paperwork again. So I recommend giving yourself some cushion in the term for how long you apply, and then also borrowing what you need to go, but not beyond that. I hope that makes sense.
Thank you, Rachel. And then we had one final question. With the government's desire to cut spending, do you find these loans are harder to get?
I find it's not harder because the government has cut spending, because they haven't necessarily cut it in the farm loan area. This is the one place that is still functioning. But what makes it harder is the lack of USDA employees. So there's like maybe one person maybe processing the loans for the whole state sometimes, because they have to have certain certifications to be able to process your loan. And they're really delayed in that. And that's why it's better also to work with us, because we are familiar somewhat with like the timelines. We have also checked in with the FSA offices and let them know like, oh, this person is applying and we're working with them, and you sign a release form, and then they also work with us to help you get through it, and talk to us as well. But and we're a little bit more familiar with the deadlines and things like that for them. But with the government spending, what I've seen is the foreclosure rates have gone up. So that's why I also say be careful, because under the previous administration, there were only 2 foreclosures in that whole time. And now with this current administration, almost 4,000 farms were up for foreclosure. So what that means is they're accelerating, like if you're like 2 months past due, they're accelerating your loan to say like, if you don't make your payment by this month, then you're in the foreclosure process. So it's not, there's no leeway anymore. So that's why I really try to emphasize being able to make your payment. And you can also make smaller payments. So even though it's one annual payment, that's kind of a lot for some people, and it's easier for them like mentally to just make a payment every month. So I recommend that as well.
Oh, one thing that
Yes.
Rachel brought up is that sometimes if you have a disaster or there's other issues, you can set aside one payment to the end of your loan. And they do have those loan servicing options. But it also is sort of like she mentioned, you're reworking your loan. So you need to submit all the information again, and they'll review your business operations to see why you weren't profitable and try and correct the problem.
Yes. And then also, I know that there was some information put in the chat about the heirs property. But then I also wanted to just highlight that there is a heirs property relending program that they have, and that can help you buy out like your relatives or the other heirs, right? And then once you're able to do that, and the title is clear, then you can qualify for a regular FSA loan, like the loan products that we have discussed.
I want to recommend these are the best loans you're ever going to find, the direct loan. That's why they want to have denials before you qualify, because this is such a good rate. They don't just give it to anybody who can qualify for a traditional loan. But for example, let's say the interest rate right now is pretty low. Let's say it's like 375,000. I really recommend everybody to download a financial calculator on your phone so you can start like playing with the rates, and also looking at like Zillow or other things online to see like, okay, what is this farm going for? What is that farm going for? So you can start looking at the prices and what it would cost. But for example, a $375,000 loan at 40 years with a 3.75 interest rate is only $18,000 a year. 18,000 and some change. So that's almost $400,000 for that amount, which means like the monthly would be $1,500. So and these are rough estimates, but that same loan amount, for example, at a 5.75 interest rate, that loan is $23,000 a year. So right now the interest rates are really good. This is a really good time. We need more food. So I really support anybody applying for these loans.
And we just had one question come in about a minute ago, and they are asking, is farm tourism or stays or wedding income allowable in calculating farm ownership loans?
No, only use your food. You can still use that after you get the farm, but they want to see that your calculations are based off of your crops. So your farm income, not your marketing plan.
Alrighty, I believe that was our final question. Thank you all for joining us this afternoon, and thank you, ladies, for getting us through this presentation, explaining the process of going to obtain a FSA loan, the different types of FSA loans. As previously mentioned, the recording will be sent out to you all after this, and it will include our contact information. And if there are some links that you found in the chat that were helpful, those will also be shared with that information. I hope all of you have a great weekend, and thank you for spending a Friday afternoon with us.
Thank you.